The on again, off again trade talks, the Fed is still clueless, and much more. What's up, everybody? It is Bubba's Bottom Line. It is Sunday, September the 22nd. What's going on, everybody? Hope you had a great week, and we were pretty much on top of the situation all week last week, and continued to monitor the latest developments that happen. And of course, obviously, some we don't care about because we really don't trade the news. We really don't care. We more react to it. But in the meantime, we did have the long-awaited or the much-awaited Fed meeting on Wednesday, and of course, they did as expected. They cut 25 basis points. Again, originally we thought it would be 50, and that was, 10 days ago, and then there was some economic data that changed that. And truthfully, they didn't have to cut it all. But the real question is when you look at the overall situation and you understand what's going on in the treasury market, and you understand that some banks over in England or overseas and are charging you to put a deposit in. Okay, so for me to deposit my money, I've got to pay a 0.75% to put in my money in the bank. Okay, it doesn't sound like a very logical thing. It sounds like a much better place for my mattress and a safe deposit box versus paying to deposit. But again, this is really, I believe, the argument that Trump is making. Now, just to be clear, I'm much more into having the free markets decide interest rates in the first place, having idiotic central bankers, Fed officials, to tell me what rates should be based on what they see, because we know they see nothing, okay, until it's well past and way too late. I don't think there should be any intervention. I think that all central banks and the Fed should be abolished. Okay, but anyways, they are what they are right now. But again, if you look at the situation and you see that, we with our treasury market, when we're selling bonds, basically, we're borrowing money. So why shouldn't we borrow money at 0.5% instead of 1.5%, whatever the numbers are? Okay. Now again, I'm more in agreement that we should have a free market. Okay, not a manipulated market by 12 individuals that have probably, other than being brilliant students, have no street smarts. Even Chair Powell, who came from the street and at one time was recognized, and he was supposed to be the guy who got it and understood it, even he don't get it. Okay, so I guess once you go into that glass tower, that room, you lose all common sense. There can be no other excuse as to why when you go in there you become a dope. I mean, again, what is wrong with free markets deciding where the interest rates are? Okay, that's how we should be deciding everything. But of course, this lovely manipulation, which really only manipulates you out of your own cash. Okay, look at it however you want, believe in it however you want. At the end of the day, your dollars are worth less today than they were yesterday. And of course, I've used the example before, but go back, if you're old enough, go back 30 years and look at how much money you made then and how your lifestyle was. And look today, I'm sure you're making twice as much. Okay, but sometimes you have to work harder to live the same lifestyle. So we can talk about the lack of inflation and the lack of all these other things going on, but they're all due to the ridiculous manipulation of the central banking system, the Federal Reserve, and the nonsense when you decide just to give it all away. It is no help that the governments around the globe spend, so because they know that they can print more money when they need it. Okay, now again, theoretically, they're not supposed to be able to print more money, but of course, we know how that relationship goes. But in the meantime, this is what we got. So the point here is that simply, if the free markets decided, I assure you rates would probably be higher. Okay, because again, I reference all of these lending places that are willing to lend money because, of course, the banks had a little bit of a cash shortage over the week. Again, it was nothing. Of course, that's what we always hear. So is this deja vu? of 2000 and 2007. And again, I don't predict collapses. Okay, I mean, again, I don't want anybody to think that I am saying that the market's going to collapse. I mean, as you know, and we'll talk about it in the market segment, we're long. So again, and I'm always long equity. So again, whether they crash or not, but again, are we seeing some of the same warning signs? Are we giving too many things a pass? Okay, that's a question. Okay, because again, at the end of the day, there is a lot of issues out there that everybody chooses to ignore. Why? Because you've got every pundit cheerleading the markets higher. You've got every advisor who only benefits by you having your money in the market. Okay, that's how they get paid. So again, is it in their best interest or yours to continue to chirp up and cheerlead this complacent market higher? Hey, look, again, we're a big believer in price anyway. So again, price determines price, and price determines the next move. But in the meantime, I'd say, again, is this a repeat? Are we seeing some of the same issues? And again, I don't have that answer, but certainly I think there is a lot of warning signs. And as I've said here for, I don't know, the last 4 or 5 weeks, that to me, we're in the very early stages of a recession. And I don't think anything's going to change that. And I quite frankly, I wish they wouldn't try to change it, because, you know, the trying to delay the recession only makes it worse when it finally does get here. Okay, so we can delay, but at the end, if you continue to try to push it back, it gets much more severe when it shows up. But of course, now again, you remember, 2 weeks ago it was the big inverted curve. Oh my God, the yield curve is inverting. What are we going to do? And there was no talk about the yield curve last week as bonds made a charge. Okay, but again, we talked about the yield curve going back 3, 4, 5 months ago. So remember that when you're hearing the news, it's always well behind the cycle, which goes back to when we tell you all the time, if you trade the news, you lose. You have no chance to trade the news and make any real money, because again, the news is 99% of the time priced into what's going on in the markets. And of course, it goes the same for the trade wars and the non-trade wars. The talks are on, the talks are off. I'm not sure. Where's Jackie Mason? I don't know what to do. In the meantime, you trade the markets. That's what you do. Okay. Now, I think when you look at the overall situation, okay, last week the supposed big sell-off on Friday was because the Chinese, what are they called? The administrators, whatever they are. Okay, the talks people, whatever. They decided not to make their trip to Montana and whatever. And of course, the markets tumbled. Now, again, did they really tumble? No. I mean, it went down. It was a triple witching Friday. Okay. Now, again, the triple witching cycle, in which I remember, in which those of you who have been around in the option and futures world for a while know that today's triple witching cycle is nothing. Okay, because they've accounted for all of that. They've taken all the volatility out of it. The only thing you can guarantee on a triple witching or a quadruple witching Friday is that there's going to be heavy volume in the Dow Jones. Okay, that's the one guarantee you can give. You can't give any other guarantee, but you can guarantee that volume is going to be huge. And why? Because many of the big firms are just simply rolling their baskets and their options positions to the next quarter. Okay, which creates that much more volume, because most of them are doing what are known as reversals and conversions. And it creates a lot of volume, not necessarily a lot of movement, because the original quadruple or triple witching cycle was that bonds, currencies, futures, and options all expired on the same day. That no longer is the case. So that's taken away. But the volumes in options and stocks still soar on the Friday, because that is the final leg when they're just recreating or changing their overall positions. So the one thing you can be guaranteed of is that there's going to be heavy volume. Now, of course, we've now got the plunge protection team out there saying they need to buy more. The Fed needs to buy more debt. Again, I go back to the same simple question. Let's just let the markets trade. Now, we know that's not going to happen, right? You've got the whole point of the political battle going on, and not the battle that's going on. The battle that's going on for years, which is why Social Security is still at 65 or 67, whatever it is, when it should be at 80. Okay, why we continue to overspend? Okay, and again, that has nothing to do with any one particular government. They're all overspent. Okay, so the fiscally responsible is no longer responsible for anything. Okay, they just, what do they care? Because again, it goes back to who really pays for it at the end of the day. Okay, now again, if you don't know, it's you. Okay, look in the mirror. You're the one that gets to pay for all these. So as you can listen to them say that everything benefits the wealthy, everything benefits this, at the end of the day, we all pay it. Okay, whatever percentage of your share is, we're paying for their ignorance and for their overspending and for everything they want to do. But now we're paying salaries to a Congress that refuses to do anything, but it wants to impeach. Okay, are they going to ever pass the what is it, the MCA? The new NAFTA deal? Are they going to pass it, or are they going to wait until next year after the election? Okay, you see, this is the real issue that I have. Again, I don't care what side of the aisle you sit on. The problem I have is that you do have a predominantly controlled left side right now of the Congress. When are they going to, USMCA, that's what it is. When are they going to vote on it? When are they going to get it through? Okay, you want to worry about the farmers. You want to worry about what's going on. If you do that, you put more pressure on China. Okay, but yet we don't want to do that. We want to talk about impeachment. Okay, you got Biden now into the mix with he wants to go impeachment, and I want to know. You've got basically a president that if you're that unhappy with, which I think he's doing a good job, but that's besides the point. Okay, if you're that unhappy, you can vote him out in a year. Okay, so do you want to spend? So let's not pass any bills. Let's not do anything. Let's continue to piss on the president and try to get him impeached versus let's get something done to make America better, okay, and get through some of these problems. But of course, that would be just too simple. Let's not worry about the multi-billions and millions of people that are homeless, okay, that are laying on the street because of the policies that nobody wants to pass. It's rather comical. And again, I'm not blaming the left. I'm sure the right would do the same thing in this situation. So again, this is not a political viewpoint. This is just ignorance of our politicians. But again, we get the fact to pay for it. But let's look at it from another side of the coin. There's over 2 million homes that are working with negative equity right now. Okay. What does that mean? Well, you can't borrow from that house, so you're basically throwing money like you are if you're throwing into the Danish or Swiss banks. Okay, it's costing you more money because you have no equity built because you haven't paid enough. You've got a bad loan, whatever reason it is. Okay, but again, so is that a good sign for the economy? Again, you've got people that are well overspent. Because again, we are a by-the-month society, okay? So, what happens if something starts to change? And that's always the question because basically the consumer is fully invested in their credit cards, into debt, and of course, the movie never ends well, okay? And I'd be concerned. And again, I'm not telling you that we're not going higher, okay? I'm not saying that we're not going to make new highs. I think we will. So those are just things to think about, okay, as we move on. And we're going to step out here for break. This is Bubba's Bottom Line. It's Sunday, September the 22nd. We hit another winner on Thursday night with the Jacksonville Jaguars. But in the meantime, we're going to step out here for break, and we'll be back. And, I want to remind you, we did a great webinar on futures day trading yesterday. If you'd like to check it out, just email me at bubbatrading.com. Also, I want you to check out tickertalker.com, and we'll have some more information for you on them. But it's a place I do some presentations for, and a very great platform, almost a social media platform for traders. And of course, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back. It is Bubba's Bottom Line. It is Sunday, September the 22nd. And of course, we always check out what's going on in the marketplace and how they did last week. And, it was a little bit of a down week. You will hear a lot of stories about how ugly Friday was. And it was ugly. I mean, it wasn't the end of the world. I mean, it's certainly, the market was down. I didn't even know it was down. But at the end of the day, okay, the market was down. all right, and it closed right on support. Now, if you've followed me for any length of time, you know that I talk about the phases of the market constantly. Well, the markets are just in consolidation at the upper end, okay? And Friday's close was dead on support, okay? In all equity markets, we closed dead on support. So what does that mean from a bigger picture, the bigger viewpoint? Let's put it this way, okay? The market should remain dull. Okay, the trading looks to be dull. We've gone through every big event we've been waiting for has turned out to be basically a buster. There has not been anything that has freed this market to run or to break. So based on dull markets and dull market theory, okay, Fed intervention, all these things indicate that the market should continue to drift higher. Okay, now we're long. Now again, I'm not saying you should retire because we're long. I mean, personally, I'd like to be less long here, but again, I'm not going to fight the mechanical method in which I trade. Okay. But again, basically we should expect the drift to continue higher. I will say this, that if the next explosive move is probably going to be down. But again, that doesn't have to be tomorrow, next week, next month, next year. Who knows when it's going to be? But the next explosive move, which means we could grind higher here and churn out and really destroy, those who can't be patient and wait for the moves, because again, it should make new highs. We should continue to drift upwards. All right. The volatility continues to come in and crash, which means there's a lot too much complacency. But again, that doesn't have to adjust today. That can take months, years. Who knows? Again, there is no answer as to when it will end. So what I think you have to understand is that there's no reason to try to short this market here. You cannot participate, but as you know from my theory, just from an investing standpoint, you should always be in. Okay, that's just I'm hedged, but even unhedged, I would always want to be in because again, you can't time it. So who knows how much farther it's going to go. There's still people from 2009 sitting in cash because they were worried about it. So we've only gone up three times, 4 times. So at the end of the day, I expect to see the dull market continue. Nothing tells us for sure what's going to break this market out or break it down, but I would assume and I would guess that it will break out by drifting higher and continuing. Okay. Now, again, as you look at the gold markets, we wrote this all week last week, and of course we're going to talk about this in our commentary about spoofing and about all this conspiracy crap. But we wrote all week last week that gold looked like it was ready to try to make another run to the upside after being so ugly and everybody panicking and, oh my God, gold's going down. What am I going to do? Came right down to support a couple times and suddenly Wednesday, Thursday, it's carried to lift up and make higher lows and bang, Friday was up about $20. Now, again, does that mean it's going to continue? I would expect to see a challenge of the recent highs. We're long, but again, not because we're long. Again, I don't talk my position. Okay, one is one, as you know, because we're in oil and I hate it. But anyways, as you know, okay, it's all about price. Okay, it's all about price movement. That's what determines the markets. So based on the pattern and based on where the algorithm is and based on price, it looks like we're going higher. Okay, silver looks like it's prepping to make a very big move. Now, I would suspect that would also be higher. Okay, but again, it could be lower, but it hasn't really participated the same way as gold. All right, crude oil, as we all remember, last week with the Saudi Arabia, and I don't even know if it's been determined exactly what it was, whether it was a drone bombing, whether Saudi Arabia bombed themselves, whether it was really a bomb. Nobody really knows. We know that it affected and created a monster blow-off to the upside in oil, which obviously helped me, even though I still hate oil. And as I told you last Sunday morning, that it would create a blow-off pattern, and it was an opportunity to sell. And of course, it got to 63, and now it's back in the mid-50s. And again, that was an easy call because, again, as you know, the panic works, and the people get so nervous. By the time the market's open, they couldn't wait to get in, no matter what they pay. That's the perfect classic blow-off example. I'll pay whatever. Get me out. And of course, that's what happened. And of course, that was create the pullback. Now, what do we do here? Well, we're still long. I still hate it. Okay. But again, I would think you're probably churning in a range now from 55 to 60. I think the grains are now becoming a much more interesting story. Okay, I think we've now turned bullish in beans and wheat, and I think corn is just around the corner. They had an okay week last week. Wheat was very strong last week. Corn was moderate. Beans were a little bit weak, but remember, beans were up last week. You had one day up, they had a 1.28 up day. So a little bit of pullback is no surprise. I think, again, for my money, I think they go up across the board. I'm anxious for when the algorithm is going to turn long in corn, because I'm anxious to rather be long corn than short it. But right now, that's the way it stands. But I think they've actually looked great and have made some great strides and look to have built a bottom. Trade wars or no trade wars. Again, I don't put much into the trade talks, and I think the grains have been the perfect example of not to get too depressed or too overexcited when you hear these announcements, because the grains really never budged with the good news or the bad news. They've just kind of rebuilt their patterns and look like they're starting to charge higher. So that looks great. We are now finally long all of the meats, fats or live cattle, same thing, feeder cattle and hogs. Okay, hogs reversed on Friday. Okay, so we're long across the board. And I know that Friday there was a cattle on feed report. Now, you may or may not know this, but I look at no news. I could care less. Somebody texted me and let me know, because I like to know what it was. I don't want to know what the report is, because I've never read any of this crap, because, again, I don't believe in it. I believe in price only. So, but in the meantime, so that should probably create a little bit of a rally tomorrow, unless that late rally on Friday, which really run just back to unchanged, is sold into a little bit. But I would expect to see, we're expecting higher prices across the board. I think they're going to be great longs, and I think the entire ag space looks to be ready to make a pretty good, solid charge to the upside now. I think that this will start to tie in. Of course, you can't time it, which is one of those things, but that was always my contention, that a big rally was coming in ag, and I think that that there may be some issues coming with equity. So we'll see. And in the meantime, we're not predicting. We're playing the pure algorithms. Bonds really gave us a little, stuck it to us a little bit last week, as they went straight up. Now again, granted, they went straight down. So you expected, or we expected, a bounce. Okay, and the higher bond futures, okay, which we're short, okay, indicate interest rates falling, which kind of is consistent. Okay, but we'll see what happens from here. Remember, the bond market really controls everything. And again, to me, so far, now this could change, and the signal can change, but for now, it really just looks like a reaction to an overreaction, right? So I think this is a bounce, and this is probably a great selling opportunity to bonds to remain short. Now again, that's not a prediction. That's not what may or may not happen. That would be if I were playing this and not playing it mechanically. That's the way that I'd be playing it. I'd be looking for a spot to sell the treasuries right now, because it does look like they're going to go back lower again, because I think you're seeing the bond markets and the fixed income markets starting to assert some of their power going forward. So I think that's an issue to look at. And I think, look, the bottom line here is I think that investors are way too complacent. Okay, I think it's way too easy, and it's really never that easy. So between what the Fed's going to do and what all this other stuff's going on, I think there's things to be concerned about. But the one thing we will not be concerned about is our positions. We are staying with the mechanical method of trading. So as you know, we're long the equities, we're long gold, we're actually short silver, we're long the grains except corn, we're long all the meats, okay, we're short bonds, okay, and again, that's the way we'll stay until something changes. In the meantime, this is Bubba's Bottom Line, Todd Bubba Orts. We're going to step out for a break and come back with, of course, my commentary. After the break, Bubba's Bottom Line, we'll be right back. Hey, y'all. Listen, got a couple of great webinars if you'd like to check them out, hedging and day trading futures. If you'd like to check those out, just email me at bubba@bubbatrading.com. Also want to remind you to check out Ticker Talker, tickertalker.com, friend of the program and going to be one of our sponsors. And of course, I do a lot of stuff for them. On Tuesdays, I do usually 30 minutes to an hour of a live webinar. So if you want to check that out, great. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back. It is Bubba's Bottom Line. It is Todd Bubba Horwitz. It is Sunday, September the 22nd. And of course, as always, I say my piece, and they like to say I bitch all the time. And as you know or don't know, I write a lot for Kitco, and boy, did my email get blown up by the trolls and the schmucks last week. I wish you guys would all just go find a new place to go live and leave me alone. But again, between the spoofing and the manipulation that the conspiracy theory in the gold and silver markets, okay, and the supposed manipulation by J.P. Morgan. Look, let's be straight up about all this, okay? Number one, okay, there's always a little bit of manipulation going everywhere, okay? Every big brokerage, every big place, every big trader is always trying to spoof something, okay? If you're holding a dominant position, you can try to muscle the markets a little bit. That has been going on forever. And again, I always use a simple example. If you own a house, okay, you can tell somebody your house is worth less. No, you're going to try to spoof it to make it worth more. Okay, so there's a simple adage to that, and it's been around since I've been trading for 40 years. Markets go to size. So if you see an excessive large bid or an excessive large offer, you assume that is trying to direct you in the opposite direction. Okay, and that person or that group or whatever is trying to either buy or sell, depending on big bids. They're actually looking to be sellers. Okay, big offers are looking to be buyers. Again, that's pretty simple, pretty basic. But again, we know that some guys got arrested, way overcharged here. But again, I'm not the law here. But again, we know that there's a lot of snarky things that go on throughout all markets, always. And we love to have the conspiracy of the gold and silver markets, and that J.P. Morgan is doing A, B, and C, and this is happening, and that's happening. Nobody ever talks about what the Chinese may be doing, or what the Russians may be doing, or what anybody else may be doing. But at the end of the day, it doesn't matter. This is what comes back to the facts, okay, is price determines the markets, okay? If you think that price can go higher based on what you're looking at, then you should be a participant. And if you really believe that this whole manipulation model works, then the price would be telling you exactly what they're doing. You cannot hide price. You can spoof, you can do whatever you want, but you cannot hide the price action. So if you truly believe in that ridiculous conspiracy theory, and you want to continue to troll everybody who writes about metals and tell them that they're idiots, which you like to do often, and all of you can go, you know what, to yourselves. But if you really believe that, then the pattern, the price, and the market will show the next direction of the market. So it doesn't really matter, because price determines the movement, not whether or not J.P. Morgan or Goldman Sachs or Joe Blow is trying to manipulate the market. Everything shows up in the footprint of the market. No matter how it got there, it shows up in the footprint. So you can take your spoofing conspiracy theories and shove them. In the meantime, everybody have a great weekend, okay? This is Bubba's Bottom Line. And of course, we got football all day today. But the big game tonight, the Cleveland Browns, the disappointing Cleveland Browns play the LA Rams. Again, not an easy pick. LA Rams 3.5 on the road. I think, again, we'll go with the small beer and pizza play. We'll take the Cleveland Browns, as much as I hate to, but Cleveland rules for tonight. Anyways, everybody have a great weekend. Thanks so much. We'll see you next time here on Bubba's Bottom Line. We'll see you tomorrow. Bubba's Daily Update. Have a great weekend, everybody.